The world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we have an epic lineup to discuss the ever-evolving topic of open banking. Formally implemented as law in January, as PSD2 in Europe and open banking in the UK, we're still in the very early days of what will be a transformational change in financial services. Joining us to discuss current developments in open banking and where we're headed from here are Louise Beaumont, co-chair of techUK's Open Banking and Payments Working Group, and a member of the Open Banking Implementation Entity Working Group. Megan Caywood, Chief Platform Officer at Starling Bank, a UK digital bank differentiating through open banking, and Jamie Campbell, Head of Awareness at Bud, a fintech leveraging open banking to create new revenue streams for banks. You may have noticed that we've recorded the last few episodes in the offices of Saxo Payments Banking Circle, a new utility layer for banking. I was recently involved in a report they coordinated on open banking and other trends and how they're reshaping the industry, which I'll link to in the show notes. As always, connect with us on Twitter, Facebook, LinkedIn, or on our website at bankingthefuture.com. If you enjoyed today's episode, please subscribe on iTunes or your podcast platform of choice and leave us a review. Thank you very much for joining us today. Please welcome Louise Beaumont, Megan Caywood, and Jamie Campbell. Louise, Megan, and Jamie, welcome to Rebank.
Hello.
Hey, nice to be here.
Hello there.
So we've got a great topic, I think, tonight, open banking. And we've discussed on the podcast at length before. Jamie, you and Megan have been on Rebank before. I think, Megan, when we connected, it was January this year. I think it was like a week before or after open banking actually became a thing.
Yeah, it was right before the 13th of January deadline, I believe.
Yeah.
Like the day before.
So now we're, 5 months on, and we can actually start to see some early results and interestingly, I think, see some of the stuff that kind of goes above and beyond some of the more obvious simplistic uses of open banking and maybe get a sense of where things are likely to go. So before we dive in, maybe we can just do quick introductions. One, so everyone can start recognizing voices, and two, so people have a bit of context. Louise, you want to start?
Sure. My name is Louise Beaumont. I'm an independent in the area. I've got three groups of roles. Firstly, in the first group of roles, I work with legislators and regulators to create disruption in financial services. Secondly, I work with corporates to help them cope with disruption. And thirdly, I invest in and take board or advisory positions with the startups which I think are going to exploit disruption.
Excellent.
And I'm Megan Caywood, so I'm the Chief Platform Officer at Starling Bank. For those of you who don't know, Starling is a smartphone-only bank offering retail and current accounts. And my role is really looking after our APIs and our marketplace, so all of our third-party relationships, really looking to create almost an app store of financial products in Starling, such that we offer the best current account, but then we also offer users access to other best-in-class fintechs who are disrupting their particular areas, and help our customers to access and manage those from within Starling.
And I'm Jamie Campbell. Hopefully you can recognize my voice from the other guests. I run awareness for a company called Bud. We're a financial services marketplace. We work with large banks such as HSBC to deliver on an open banking promise that they want to bring to market. Great.
Well, Louise, maybe being the unbiased participant among us, in that you don't work for a company that's directly invested in open banking, maybe you can kind of help set the scene. So as you said before, we're 5 months on from the launch. What's happening? What's working? What's not working? Where are we?
It depends what you mean when you say open banking. So there's the expansive view of what open banking could be, and in my view should be, which is around driving competition in financial services so that we actually have a stronger economy with greater diversity of supply, more choice for consumers and small businesses, and financial inclusion. Because what we have at the moment is a lot of financial exclusion. And you can think that that might be traditionally vulnerable people. But as our economy changes, for example, big banks can't handle things like people who work in the gig economy because they don't have a contract that they recognize or an income that they necessarily recognize. So as our economy evolves and changes, financial services have not been keeping up. So if you want to take that large, expansive view of what the open banking promise could deliver, we haven't even scratched the surface of it yet. And I would argue that at the moment where we are is a compliance reaction to regulation. Times 10 when you take into account the kind of API crazed technologists who've grabbed budget and run with it. So the great thing about regulation is people pay attention. The bad thing about regulation is it brings out the anaphylactic shock compliance reaction, and that's compounded by the API specification game. So what the Competition and Markets Authority did rightly, in my view, was they specified that we would need open APIs. What that has meant as a first reality is that technologists have gone, right, we need all the budget to build the APIs. And what we're missing out on is the implications, the wider implications for the banking business model as a whole. And that would be my kind of précis of where we are right now.
Excellent. Jamie, maybe based on your work, so you guys at Bud are effectively engaging with banks around the world to launch effectively a marketplace along the lines of what Starling has built in, but you basically offer that as a service. When you have conversations with incumbent banks, different countries, UK certainly, but other countries I believe as well. Apart from the conversation you have with the person who's potentially super switched on, knows open banking, loves it, can't wait to adopt it, there are other people at the banks also, compliance people. How do those people think about open banking at this point? Like, how do they see it? Well,
I think what we have tried to do is rephrase what a lot of people kind of understand open banking to be. From inside of a bank, you could argue that some people see it as a chance for small companies to take data that has been quite precious to a bank and use it for their own means to monetize a customer. Really, the way we are trying to rephrase this conversation is the fact that what open banking is, like fundamentally, is if you are a customer that is not satisfied with the service they're getting from their current provider in terms of how their data is being used, open banking is the first real step to saying, well, actually, if you're not happy over here, you can take that data, you can give it to someone else who you are confident is going to use it in a way that's going to benefit your life, and you can do that in a way that is safe and secure and convenient. And really, the conversations that we have start with kind of almost like a re-education, which is like, it's not about banks and it's not about fintechs. It's about customers using that data for their own means and really taking that kind of control back. And next, the conversation turns to, right, okay, well, what do we as a bank need to do? And how do we do it? Because if you're a large incumbent, then arguably you could look at this situation and say we have the most to lose. If you were a mid-tier bank, you could look at this situation and go, we've got the most to gain. And if you're a fintech company, you need to understand kind of, I guess, where your role is in all of this. So our role primarily is with kind of the larger of the incumbents, the organizations that think, of all of the roles that banks could play in the future, whether it's one where we just provide banking services or one that, where maybe we're the whole platform for people's, financial service relationships, we tend to work with the latter. Banks that have an ambition to be as close as they can to a platform, which controls a lot of the relationships that people will have with their finances. So, I work with HSBC. We have a product in market with their First Direct brand. And really the ambition from that point of view is, let's bring together all of the accounts of an individual. Let's bring together the wealth services, insurance services, savings services that individual, may be interacting with, may want to acquire some new services. Let's bring together all of those companies so that a customer can manage them all from one place. It's really the first step on that kind of platform journey. And then that's kind of what we've been doing here in the UK, but obviously the UK is a bit of a poster child for kind of PSD2 open banking style services. And so naturally there's a lot of interest overseas. What are big banks doing about this? What are the strategies that are coming to the foreground? And what can other banks and other regulators learn from what's happened here in the UK? And really it's about understanding the core role that you think your bank can credibly play in a world where daily banking activities like checking your balance and paying a friend could potentially happen outside of those daily channels that the bank has ownership of.
They already do.
Yeah,
they already happen outside of those channels, and that's the really important point to note here. Whenever I talk to banks about this, you're describing it in a way where they sit back from it and imagine that it's almost like sci-fi. And I have to say to them, no, I'm telling you history. I'm not telling you sci-fi. And the way you're describing it is really helpful to them because it's helping them understand how they're being pushed back one or two steps from the customer. And you're asking their ambition of how close to the customer do they want to be, fulfilling what role. And that's a bigger question about what is their business model. How are they making money?
We get questions from banks, not just in the UK, but in Europe as well. And they're saying, "Oh, we want aggregation. Come and help us do aggregation." But the fundamental question is why. Aggregation, i.e., probably the most popular use case out of open banking. It really is a step one of a multi-step process. Aggregation is all around creating understanding. It's what you do with that understanding that gives you relevance in the market. And, we still have to take people, and individuals at banks, individuals at fintechs from, okay, what do you want to achieve with that aggregation piece? And what is that going to allow you to do tomorrow, what you can't do today? Or what will it give you more efficiencies to do those things? And really, get these companies to understand the why behind the kind of the product, which is aggregation.
And if you take a really limited view of what it is you're trying to achieve, you end up with Uber versus Halo. So Uber comes into the market in the London taxi market, for example, and London taxis look at Uber and go, my goodness, this is a taxi hailing app, and we must build a taxi hailing app in order to compete with a taxi hailing app. It misses the point entirely that Uber is not a taxi hailing app. It is a data platform which connects people with things that they want and delivers them in real time. And it's now building itself out to be your kind of in-ride entertainment system so that you can arrange dinner for when you get home, and far more complexity beyond that. Halo was the incumbent industry's competitor product to Uber. And it's failed twice and was sold for shares, or as I like to think of it, share, to Daimler Financial Services because it was very limited in what it did, and it has failed catastrophically. And what Jamie is describing, therefore, is the aggregation facsimile of that, which is where if you don't understand what aggregation is the first step to enable future services, then you're going to build something which is absolutely doomed to fail because it doesn't understand what it's growing up to be. It is literally Halo, the banking equivalent.
And I think when I'm going to bring in Megan here because she'll have a lot to talk about in this topic for sure, which is where the second part of our business comes in, which is the marketplace of financial services. So for us and the companies that we work with, step one is around understanding the customer, particularly the outcomes that customer is looking to achieve. So exactly as Louise is saying, comparing Halo and Uber. Looking at those outcomes and providing the right financial service at the right time so that customer can achieve their ambition by any means, and that's kind of what we are working towards. And that's that kind of the marketplace model that we're trying to instill in larger banks. But, I know Megan's got a lot of, experience around that.
Yeah, Megan, I mean, maybe you can just kind of give us like 2 or 3 quick examples about stuff you guys have already implemented that's like actually live in market, and then kind of where you see all this going.
Sure. Well, I think Jamie set a great precedent for that, in that the open banking regulation is one step in this direction of how do we offer products and services in a new way, but it's also really pushing into the forefront the fact that the customer and their needs should be the priority. How do we serve them better products and services? So the traditional model of the bank offering all of the products and services themselves, upselling the customer on these products and services, no longer works, and it's partially due to the regulation. The fact that the government is actively supporting disruption and competition, they're making it easier to have transparency around those options and to more easily access them. And I think it's great that this particular legislation is really making it important for the banks to adopt that mindset of there's competition, people can easily access that competition. Let's figure out how to make that work for our business model. How do we give customers better access and better choice and make that work for us from a business perspective as well? For Starling, we started on this back in 2016, like pre-open banking, actually. So we were building out a full set of open APIs in lockstep with the current product, such that in April of, 2017, last year, we launched with a full set of open APIs. And so the first thing we started doing was integrating with third parties, such that they were integrating the Starling API. This is the main use case of open banking because it's banks making their data available. It's saying that the customers own their own data. They should be able to share it securely. And so the first example that we went live with was Moneybox. So they're a wealth management app where you round up as you spend your transactions, and that puts it into an ISA. They integrated the Starling Transaction API to make that happen in real time. Another example from last year was Yolt. So to the aggregation example, what they're doing is they're aggregating all of your bank accounts. We were the first UK bank that enabled them to do that via API and have a really seamless customer authorization flow, or called an OAuth flow, to make it such that the customer could be in the Yolt app and say, I want to connect my Starling account. Just opens your Starling app. You hit yes, happy to share my data. And then you would flip back into Yolt and be able to see all of your Starling Bank data there as well. This year, we're taking that a step further. So last year was all around open banking API, enabling third parties to access our data, and for customers to securely enable other third parties to access that data if they wanted to. The next phase of that, though, is all about the choice aspect. So within Starling, we have this marketplace section. And the point of that is we want to help customers find products and services for all of their other needs. So from wealth management to insurance to mortgages, loyalty and receipts, other cool apps that connect with their bank account. So we've started on that this year. An example of one of the latest ones we've launched is Wealthify. So they are a wealth management app. They enable you to open an ISA. And what happens is you see Wealthify in this type of app store in Starling. If you say that you want to add them, it asks the customer to permission them to share their Starling data across to help set up their Wealthify account. If they say yes, then all of the fields that they would enter in Wealthify, Starling already had, will be auto-populated. So the name, the address, the date of birth, the account number, the sort code, all of that fun stuff. The idea there being that we can help make it easier for customers to access these products if they want to. So then the customer goes about and sets up Wealthify as they normally would in the Wealthify app with the fields auto-populated from Starling. Then we'll also do another OAuth flow where Wealthify will ask the customer if they're willing to share that data back into Starling. If they say yes, then what happens is Wealthify shares the ISA balance back into Starling such that you can see your ISA balance alongside your current account balance. We've also done integrations with PensionBee, so in that case you see your pension balance in your current account as well. A travel insurance provider through AXA, Wealthsimple, and Habito for mortgages. So the idea there is really wanting to phase in these integrations in the Starling app where customers have choice for other financial products and can easily access and manage them all from within Starling. But we're just at the beginning of that journey, really.
But one of the things that I feel like is always worth doing, talking about open banking, is kind of like differentiating between capital O, capital B, open banking, i.e., what's required by law, PISPs, AISPs, open APIs, and then kind of open banking, lowercase o, lowercase b, which is more around effectively bringing technology best practices to banking, right? Yeah. So it's like, okay, there are public data sources out here that we aren't currently using, and by incorporating those, we can create some amazing experiences. Yeah. I think Wired wrote an article on Monzo recently, integrating IFTTT, and you can do everything from like kind of the mundane and funny, like set your lights to blink, or like order a bottle of champagne every time you get paid. But you could also like set up some really interesting business logic around like process flows through that, and that just feels like it's the cusp of new experiences that are about to be created.
Well, I think what's notable about that is that's complying with open banking to the spirit of open banking. It's not to the rule of it. They don't have to enable IFTTT to access their data. They're not an AISP. It's not mandated. And similarly, the Starling Marketplace and the app isn't mandated. These are examples of how, when you're really complying with the spirit of it, in terms of you want to give customers new products and services, new choice, you want to help them to do things in a new way, you want them to be able to own their own data, securely share that with whoever they want. These are all examples of doing that. So I think we're just now getting to that place where more and more companies, I think we're going to increasingly see, even from traditional banks like those that Jamie works with, where it's going beyond just compliance, and it's starting to get into this interesting area of really bringing it into the spirit of the regulation in terms of giving customers ownership of their own data.
And I think the key here is looking beyond product. The joke is, of course, that the sector called financial services is not a sector that provides service. What it does, traditionally and historically for centuries, is product push. Big, dumb products, mass marketed without consideration for the end customer. What open banking does is it quite literally gives the consumer and the small business a superpower called, I can use my data to access services I like, services that I think have value for me. And so what Megan's absolutely right in describing, and Jamie too, is describing just the baby slopes of what those new services could look like. And remember, we are foraging here for unmet and underserved needs. And the kind of services that will address unmet and underserved needs are services you never even thought of, services you certainly never asked for, and services you now can't live without. And when you think about the services that we have acquired over the last 10 to 15 years that fit those three descriptors, they typically are coming from big technology firms. Think about how Amazon has changed your life. Think about, we used the Uber example earlier, think about how Uber has changed your life. Now, if you live in a city, you have many transport options, from your legs to your bike, to the tube, if you live in a city with an underground, to the bus, to taxis. But 4 or 5 years ago, if I was working late on a Thursday night and I needed to get home and I was standing on the street surrounded by drunks and tramps, in the cold, in the rain, in the dark, I would have put my hand in the air and waited for a certain type of car to happen to drive past me with its light on, not off, and that was a London taxi cab. And I would have been grateful when one materialized. And if you asked me what would my improvement on that service have been, I'd have said, I don't know, longer arms.
More taxis.
Yeah. I mean, it's so it never occurred to me that I had a location device in my pocket. And it never occurred to me that I could summon somebody to me using my location device. What Uber did was it found an unmet or underserved need, and it now has driven improvement in service in other aspects of our lives. So, for example, 5 years ago, if you got into a black cab, you had to pay in cash.
Yeah.
They might have had a card machine in there, but it was never working, right? Because they didn't want to be on the record, or they didn't want to pay the fee. So what we're on the cusp of here, and what we've started to hear, is innovations in service that we didn't ask for, we couldn't imagine, and now, as they arrive, we're not going to be able to live without.
I think I think Louise is talking about this amazing thing with Uber, which is around the fact that Google Maps and location-based services had a real kind of power because they were super easy to be connected with. What we have at the minute is a slight hiccup in the fact that it's not easy to be connected with because, firstly, to do open banking, you have to be regulated. So there's a lead time to get to the point of open banking kind of status.
Well, you don't have to be, but most banks wouldn't let you access their APIs unless you are.
Yeah, sorry, you don't have to. You don't have to be, but it's it's
helpful.
It's helpful to be, which. And the first kind of experiences that are open banking kind of enabled are primarily around aggregation, and primarily they are aggregation experiences in different apps. So open banking still is something that happens over there. It's in a different app. It's kind of for a different user. It's still not a mainstream experience. And until, a bank says, well, we're going to push aggregation through our main app, which is yet to happen, or until, something else happens, open banking will still be something that happens over there. So what we at Bud have been doing kind of over the last few months is really kind of considering what the credible role that we can play in this industry could be. And really our kind of synopsis of all of this is, until open banking, in inverted commas, open banking enabled services happens in customer journeys that people are already kind of comfortable doing, i.e. they speed up the processes as Megan was talking about earlier with maybe not auto form filling, but kind of assessment, trustworthiness or creditworthiness assessment, or kind of, linking your accounts to see where you could be saving money in certain, in certain environments, whether that happens in a utility website or whatever. But until it happens in the places where people are already kind of doing these experiences, open banking will be something that happens over there. And so what we've tried to do at Bud is kind of really open up open banking. That's an annoying tagline which I wrote in a presentation, which I can't get out of my head. But it's about enabling businesses that have an aspiration to have open banking enabled services, whether it's speeding up lead times or helping people on board, or helping people see where they are overspending in certain spaces. It's really empowering those businesses to accept that data. Primarily to accept the ability for a customer to use an open banking enabled service to see where what their data is doing. We call it the Bud Exchange, and it's going to be an API for open banking, a standardized API for open banking, which connects to the CMA 9 banks here in the UK. Eventually, we want to push it a little bit further. So if you're a product owner who has, an aspiration to add an insurance service to your product, really what we're looking to do is expose the APIs of all the other businesses that we've integrated into our platform. So you can kind of almost pick and choose these different services. So it's almost kind of creating a new standard for Open Banking Plus, because Open Banking covers current accounts and payments across retail.
It's like
and small
marketplace
business.
as a service.
Yeah, in a way, because up until this point, the only way you can kind of work with our business, or traditionally the way that people have been working with our business, is you're a large bank and you work with us to stand up a new app, which is fully enabled with all of our technology and all of our microservices and all of the amazing things that the guys in Hackney are building. But for companies that could benefit from some of the the microservices that we have internal APIs for anyway, for them to benefit, there's no real opportunity. And that's what the Bud Exchange is all about. It's about making sure that they can benefit from these services that we've built for larger incumbents, but giving them a chance to just use like the little pieces of it so that they can empower new customer journeys and allow their customers to put their data to good use within the channels that they're already engaged in.
But it's so interesting to think as we're talking that, so there's this CMA 9, right? The 9 biggest banks in the UK that are required by law to make their data accessible, expose APIs to registered third parties, but they're not the ones who are actually innovating in this space. And I think it was probably a few months ago, but I think this point was made on the podcast that to an extent this is almost a regulator or government stepping in with PSD2 open banking to save an industry that otherwise may have very quickly become completely irrelevant. If you think about banks as this pillar of economic stability in a country, you can see why governments would be interested in doing that. In a certain sense, thank God it's law, because otherwise these banks would not exist for very long.
Banks were basically in a cul-de-sac. And they were deploying a 17th century business model and competing only with each other. The real economy actually runs on data. And if banks were unwilling to engage with that, because remember, regulation is one of only 4 drivers towards the future that we're all describing here. The first driver towards the future is consumer attitudes, behavior, and expectation, which have been set and are ever increased by those tech titans that we've discussed. Our expectations have changed about what service looks like and about what our lives can be like over the last 15 years. The second driver to change is the technology which enables all of that. And I mean not just data handling and data moving, which is basically all APIs are, data analysis, of course, and the machine learning, the cloud technologies that come with it. That confluence of technology is enabling this. And then we've touched upon some aspects of competitors which are coming into this space. And to be clear, we're all really clear that those tech titans have been in this space for a long time. Look at all of the financial services that Amazon alone provides and tell me they're not in financial services, for example. So those 3 drivers of change had been roundly ignored by the banking incumbents. And the power that enabled them had been roundly ignored by the banking incumbents. If the CMA had not done this, if we did not have PSD2, we would be in a much less strong position for those banking incumbents. They have been forced to enter the fray, and now they must learn.
So what's interesting about this, though, is that we might not see lots of innovation coming from the banks. And really, when you think about it, the regulator in writing this legislation was not thinking, how do we help the banks have a larger market share? How do we help them have better products and services? It was more around, we need competition, we need innovation. People aren't switching accounts, they don't have transparency on what their options are. We need to help, the competitors in the space to have more equal access to innovate for the users. We need to help people to have better choice. And so part of that with APIs, what I love is, so the regulator has these 5 use cases. The main one is aggregation. People can aggregate the accounts so that people can compare and more easily switch. And that's great. But the idea is that neither the regulator nor the banks have a monopoly on innovative ideas. Yeah. By opening up these APIs, you're saying to all of these different companies, all of these third parties, you can innovate on this data as well. You can do new cool things. And part of the exciting thing about that is we can't predict what they'll do. Similar to, so the Uber example built on the Google Maps API. When Google launched that Maps API, they had no idea that a peer-to-peer ride-sharing app was going to be built upon it. And so the exciting part of APIs isn't what the original company is going to innovate on with it, but the innovation that it enables by it. And what's a nice side effect of that is it's forcing the banks to think like, oh crap, now all of these other competitors will now be able to better have transparency with customers around how their products are competing with ours. Customers can more easily access them. We need to figure out a way to make this legislation work for us. And for it to work for us, we actually have to put the customer first. We really need to think around what's right for them, what's the best product and service, and how do we enable that. And so it has this kind of industry-wide halo effect. But I'm really most excited about the types of innovation we just can't even predict by opening up these APIs.
What's so cool is the fact that this, our regulators have changed the game completely for big banks. Before it was the battle for the current account, and now it's the battle for, you just got to keep their attention for more than 2 seconds. And that's not a game that banks really have been playing in, really. No one's really ever thought, how do I maintain a channel of attention, a direct channel of attention with my customers? So an interesting statistic is that there are 5 apps that people spend 90% of their time in, and Facebook owns 4 of them. That's Facebook, it's Messenger, it's Instagram, and it's WhatsApp. And you spend 90% of your time in those. That's 90% of all of your time on your phone just engaging with content and experiences that Facebook technology is behind. And that's a company who understands, all the motivations behind, keeping keeping an individual, a person customer. What am I talking about? Keeping a person's attention. And now kind of open banking is almost like it gives that kind of competitive edge to banking, which is, all right, well, if you're not happy with the app that your bank has provided, go somewhere else, And now it's like, okay, shit, what are we going to do about keeping people where they are? Because a lot of the banks, when they think about the business model, and a lot of bank CEOs, I assume, I hope, are thinking about the business model that's going to take them to, the next kind of growth of the business. And what they don't want to be left with is the worst part of the business in terms of ROE, which is just, the act of having lots of money and making money from that money. You need to maintain an open channel of sales and of origination, because that's a 20% ROE business. And if you lose that channel, then how are you going to kind of be the big banks that you are now in 10 years time? And I think that is the interesting thing. And it starts with, how do we keep the attention? Mm-hmm. And as Megan says, it's, you have to put customer outcomes and customer, those ideals at the forefront. Otherwise.
And there are 3 cohorts that need to be asking that question. Absolutely. Jamie's right. It's the executive team. But I would argue it's also the boards of those banks that need to be asking these questions. And beyond that, it is absolutely the shareholders of these banks. And I know they're starting to ask questions because they're asking me and people like me, what does this mean? And what they're getting back from the banks when they ask them, because some of these shareholders are quite activist about how they're handling their relationships. So they like to think they can provide guidance on capital allocation inside banks, so what banks spend their time and effort on. And some of the questions they're asking back to people like me is, we get told this is just a regulatory thing and it's being handled and they are compliant. And when I explain to them actually the impact of what this has on the industry as a whole and the business model in particular, they say things like, gosh, I wish I'd talked to you a couple of years ago before I made this insert large number of billions investment in this particular company. Because the idea of a regulatory moat is absolutely outdated. It is no longer applicable. When you let the value free and you put the consumer back in charge of the data that they generate, you are enabling a superpower. And the more persuasive the services are, the faster they will be adopted. And the kind of characteristics of services that people adopt are people adopt services that work and that they find valuable, but increasingly that they find pleasurable. And for me, when I think about the services that are going to be adopted as we come as we go forward into this marketplace, they are absolutely the way to think about it is loyalty generated by pleasure. And the joke is that in the past in financial services, it had to hurt It had to be painful. Opening a bank account was painful. Switching current accounts was painful. Doing all of these things. Opening up a new product even was painful. There's more forms than you can possibly imagine. Going forward, I think we're going to learn from other sectors, and we're going to understand the value of pleasure, and we're going to understand that pleasure and utility drives loyalty. And finally, organizations are going to start looking down the right end of the trust telescope. When you were talking to them before about loyalty, large organizations would talk about how loyal their customer base was and were they a loyal customer base. Actually, now corporations can start showing loyalty to their customers because they will actually understand them.
Yeah. We just launched we've released, I guess it's probably the right word, our book on open banking, available online now.
Yeah, great. We'll link to it.
Yeah. And it starts with a quote, which has actually been, heavily kind of shared on social media. It starts with a quote, which I'll probably bastardize in some way in this recording, but it starts with the people and organizations who could answer the question, "Who are you?" have been in a position of immense power. Open banking helps change that, because it means that you can be the person who answers that question. It means that you can kind of put that data to good use and go, well, I know who I am because here it is. It's been locked away in a castle, which is the kind of the traditional banks, and now I can kind of free that data and put it to good use and actually, fundamentally answer the question as easily as just by typing in a few characters on a keyboard. Here I am. Here is what my data is saying about me, and here is the things that I should be focusing on in my life against the things that I want to achieve. And it goes back to that, taking away that moat has allowed that power to shift from up high to right down at the ground level with where the real people are.
Yeah, and it's that, I feel like, that empowerment of customers to make better financial decisions, which is so important. So our founder and CEO, Ann Bowden, she previously had her entire career in banking. And whenever she had this idea for Starling, it was partially because banks hadn't been keeping up with technological change since the banking crisis, and there was a huge opportunity in what you could do in terms of just the user experience. So to what Louise was saying, like how easy it is to open a bank account, how real-time and personalized these services can be that people are used to from the apps like Uber and WhatsApp and Airbnb. But also with everything else in their financial life, the kind of stress that comes with it, because financial services, banking, everything is just stressful for people. Most people don't want to be experts in finances. They don't want to spend all of their time thinking about this and working on and optimizing it, as much as us in this room might find that very exciting.
You're such nerds.
And I think the exciting thing about open banking is it's helping to give customers that control, that transparency, to make better financial decisions easier. So taking this kind of world that's been very complex and very hard to understand, and data's in all these different apps, and you have no idea like kind of the correlation between the different products and services you have, or the outstanding services you have, and making it clear and helping customers have better control of that. And I think that's something that is empowered by open banking and how we're putting that back to customers.
And I think one of the things you said there, Megan, was so interesting. You're saying that people don't want to be experts in financial services, and you're absolutely right. People also don't want to be experts in retail. They don't have to be. Combination of Amazon and PayPal, and you're done.
Yeah.
And so those examples give us a real understanding of what consumer focus actually means in terms of delivering service, which is consumer at the heart of it, the utility they get from the service, the likelihood that they'll come back to it, and the reality that they are not being held hostage. Nobody's held hostage. You can use the service or stop using the service. You use the service if it works for you, and if it ceases working for you, you stop using the service. This idea that you actually have to hold people hostage because your service is dreadful is dead.
Yeah. And I think something that's been a bit negative about the media around open banking since then is you see these headlines like banks are going to share your data with everyone, when the reality is, to your point, is it's not that you're held hostage, it's not that you're mandated to do anything, it's that the banks are mandated to give you a way to securely access other apps and services if you want it. But if you don't want to access these new services, or if you don't want to share your data, it's completely up to the customer. But the important point is that's the customer's choice. The banks just have to enable it if they want it. They can no longer say, no, it will violate the terms and conditions on your account if you share your data, or no, you can't do X, Y, or Z. It's the customer's data, they own it, and they can do whatever they would like with it.
And traditionally, the banks have done three things with the data they hold on their customers: hide it, hoard it, and never ever look at it. Certainly never look at it for the benefit of those customers.
Yeah.
Finally, now, customers will be able to use their data for their benefit to access services that they like.
So Louise,
Will, you're still here.
prior to
Jesus.
starting.
Wow. Where did you go?
Oh my God.
So before we hit record, Louise, in addition to showing us some pretty hilarious banana gifs,
Were they hilarious? They were. They were
you were
something.
kind of creeped out, weren't you?
They were
Jamie was disturbed by that particular banana gift.
They were something for sure.
But you
How did they
said
get that
something. You said something which I thought was striking, and I
Just the
wanted
one
to
thing.
pick it. Well,
Thank you.
many-
She came in.
many-
She came
many
in
things, of
swearing
course.
like a builder.
You said open banking has been hijacked by API crazed techies and compliance drones, and nothing will come of it. Provocative. What do you mean by that?
What I meant by that was very simply that in the first few months since the APIs have gone live, or indeed in the run-up to it, what we have seen is simply the compliance reaction to regulation. And typically in any banking environment, the people who work within banks are very, very strong on compliance because they feel themselves to be and are highly regulated. So they have great compliance genes. So when there's another bit of regulation coming out, the compliance people grab it and they force the rest of the bank to behave according to the regulation. And the minute you've held up that kind of religious symbol, everybody else falls in line. And when you have, as the CMA has rightly done, when you have set out that the way that you comply with this regulation is by building an open API to a common standard, then the technologists grab the budget and run with it. And when you've got the compliance people and the technologists in league responding to regulation, what it actually does is it lets the business off the hook. And the bigger questions here are for the shareholders, for the board, and for the executive, which is, what does this mean for our business model? How do we adapt to this new reality? And how do we win in this marketplace? Because banks are a mixed ability class. Some of them will do well, some of them will limp
I love
on,
that so much.
and some of them will fail.
I was speaking to to someone recently in Amsterdam for Money 2020, and we were talking about our model, and it was the first that they'd heard of it, especially from a large bank, and they likened it to, okay, so if I get this straight, what you're, this is what he was saying. He's like, if I get this straight, what you're trying to encourage a bank to do is to actively sell their competitors' services. I said, listen, when you put it like that, it sounds really bad. And it's like, but really, what you need to kind of imagine a bank as not as just a seller of products, but imagine a bank as a mall, a shopping mall, and people come to do business, in this mall. Real people come and do business in the mall, and the attraction is the fact that they have all of these amazing, boutique shops in one place. And the real business model of that mall is the fact that people are coming to you, and all of those transactions and all of the interest and all of the interaction is happening, under your roof. And that's more how we want to frame, this idea of bringing in competitive services to your customers, because actually when open banking becomes slightly more mainstream and this idea of taking your data elsewhere becomes more mainstream, shopping around is going to be super easy, like really, really, really easy. And the thing that we believe, or that we're backing, is going to help kind of win out in the end, is if people are doing business under your roof, then really you're the winners of that equation.
All right. So to wrap up, we're 5 months from the kind of the beginning of the open banking journey. Where will we be 5 years from now? Like, what new experiences, services, to use Louise's word from before? What stuff that today doesn't exist will exist 5 years from now?
I can't answer that question because it's unanswerable. We're talking about liberating innovation, liberating ideas, and helping them fly. What I can describe is what it feels like to be a consumer 5 years from now. And I'm going to do this through the medium of the daisy. And I'm going to describe to you a data daisy. So we're going to imagine your happy, smiling face, Will, at the very center of a daisy.
This is so great.
I should close my eyes. Guided meditation.
We have been so well behaved up until this point as well.
Now it all breaks down. We get to flowers and it breaks down. Imagine a yellow bit at the center of the daisy, and then imagine all of the white petals around the outside. At the moment, we have a very sparse data daisy. Will is a very sparse data daisy because all we have is one petal of data, which is your current account that you can plug in using the Open Banking API. And that's why at the moment there isn't a huge amount of value that you can leverage through Open Banking, through that one petal of data, because you've got one single solitary sparse petal of data in your data daisy. Imagine as the open banking regime rolls through, you can plug in your mortgage petal of data, your loan petal of data, your savings petal of data. If you were an Australian in time, you'd be able to add your energy petal of data or your telco petal of data. As companies evolve, you'll be able to add insurance petals of data, pension petals of data, and more. Retail petals of data, for example. That will allow you to have around you services which are hyper personalized, predictive and preemptive that come to you and flex and flow around you based on the petals of data you're willing to share. Therefore, your time and attention will be spent with those brands which make sense to you to be delivering those services, and with those brands that can talk to you and listen to you one-to-one at scale, so that you can receive personalized service because you trust that brand and you believe they are going to deliver the value to you from you sharing your data with them. But I don't believe at any point any consumer will use the words, I'm sharing my data. What they will do is say things like, I use Uber because it works, or I use Amazon because it works, or I use such and such because it works. And what they're getting is both utility and pleasurable service.
All right. Well, I think Louise's answer to that question was fantastic. So I won't put Megan and Jamie on the spot with the same question. But, I mean...
Yeah, it was really good. So I'm really impressed. I just don't know how to follow that up. Yeah, what she said.
Yeah, I feel like I'm going to change the logo for Bud Exchange to a daisy.
All right, so Megan, if you look at your roadmap, you've got a marketplace live in the market. You've got new stuff surely that's being added every day. But if you look kind of over the horizon, what are the most compelling use cases?
Yeah, so I think, well, to echo Louise, I think probably the most exciting use cases are those which we can't define because of the innovation that we're enabling based on the premise that we can't predict it. I will say this is what we're working towards right now. So the very first stage was just enabling our APIs to be available for customers to share their data. So done. Next is having other third parties in the app. The first part of that was just enabling customers to authorize that third party to share the data back in. So that way you can see your pension balance alongside your current account balance. This idea that you could have easy visibility across all of your finances in one spot. That's kind of the first thing we're aiming for. The second bit, which we've started launching, is like with Wealthify. So it's easier to access those. You can share your Starling data with them. The Wealthify data can go back. And so it's easier to access and easier to manage. The next bit of that for Starling is then to add more features to that. So if you're in the savings goals part of the Starling app, can you easily just swipe data with a touch of a button into your ISA in another app? Very contextual, real-time, personalized, based on the services that you particularly need. We're used to this from the rest of our life, using all of these other great tech companies, bring that type of experience into banking. I think as the years roll on, though, it's so hard, I think, within technology right now, given the pace of change, to detect exactly where we'll be in 5 years, but I can't wait to find out. So,
Jamie, final thoughts.
That's it? That's all I get? Final thoughts? No, leading... Okay, final thoughts. Do you know what? I think, you've got for people in this room who are, pretty excited and I dare I say intelligent, around this subject, almost 3 empty glasses. I'm watching you, Megan. Drink
sorry,
that.
I know. I'm like, wow, I'm behind.
Almost 4 empty glasses as Megan chugs her way down that white wine. 2 people who work for businesses that advocate a business model that I think flies in the face of a lot of kind of traditional banking business models. And one person, myself, who joined the financial services industry kind of less than 3 years ago. I think what that demonstrates is just an absurd kind of attitude and appetite for change for this industry. And open banking is one thing. It is not happening in a vacuum. There are other kind of, regulatory and innovation kind of regimes that are happening. But I think it signifies one thing, which is that this is a really, really exciting place to be at the minute. I used to work in advertising, and I used to think that was really exciting. But this is kind of the zeitgeist of something. I think for the UK, sure, for Europe, definitely, and the conversations we have with banks and other regulators globally, it looks like it might change something a little bit further afield as well. So, I guess my final thought would be, this is a great time to be in financial services.
Yeah.
Hail open banking.
All right, guys, where can people connect with you, find out more about your work? Louise?
I spend my entire life hiding, but you can find me on LinkedIn.
All right.
Great. I am probably most easily found on Twitter, so at Megan Caywood. And for Starling, it's just starlingbank.com.
I will be on Twitter as well, at JC the Original. Don't hate me for that. I made that when I was like 13.
Absolutely hate you.
I know.
I totally hate you for that.
It's terrible. Do you know when you're like, when you're young and you think this is really funny, because Jesus Christ, this is really funny. It's not now, because it's like because it's like a real thing.
My first Twitter handle, I think, was like at Megalon or something, like my nickname from my brother when I was like a child. Thankfully, I changed that soon thereafter and got my full just at Megan Caywood.
Yeah, I feel like my Twitter name is the Hotmail address, the very first Hotmail address equivalent that you set up.
It's more embarrassing.
You're clearly a generation. For us, it was AOL.
I know. I've still got an AOL email address. I still have an AOL email address, and I get.
You were allowed to near technology way too young.
People at my work take the piss out of me because I still have the AOL email address.
All right, so give it to all these
Which
people.
you log your MySpace account with.
But yeah, talk to me on Twitter, or you can go to blog.thisisbud.com. You'll find a lot of stuff that I've written there. The book on open banking, obviously, as I said earlier. We've also done a global open banking report that you can download, which is written by me, which means that there's very little stats in there, but it's quite entertaining.
Perfect. Guys, Louise Beaumont, Megan Caywood, and Jamie Campbell, thank you very much for joining us today.
Yeah,
cheers, Will.
Thank you. Right. Cheers.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.